Hello, welcome to the Active Value Investor channel. My name is Victor, and in this video, I'm going to be covering a biopharmaceutical company by the name of Abbvie, symbol ABBV. This is a company that I've had for 4 or 5 years. It's been a good stock for me, and I'd like to go through an update on my analysis of this company. Let's get right into it. So I like to scorecard, a stock and make sure that I'm willing to invest further into a stock, or if I should sell. First, is it an industry I want to be a part of? Second, is it a company that is well operated and performing well? Next is debt. With the recession upon us, I want to make sure that I get an investment that is less than 3 times EBITDA, or total debt is less than 3 times EBITDA. I want a discount on the stock. And that then leads me to the question of, should I be buying more stock of this company going forward? If you look at Abbvie for the last 12 months, it's done well. It's gone up 12.3% in a market where the S&P went down 13%. The NASDAQ went down more than 30%. So Abbvie's done well in the last 12 months. Over the last 5 years, it's also done well, close to 47% return. And keep in mind, they pay more than a 3% dividend at some point, at some times when, depending on the price you paid, they'd pay up to 5% dividend. So just a good holding as a biopharmaceutical play. As I look at the intrinsic value of Abbvie, I like to look at free cash flows that a company produces, put them into a model that discounts those free cash flows and gives me an intrinsic value. Looking at the most current full year that they've had, 2021, which is consistent with how they're operating year to date for 2022, it's $21,990 million of free cash flow. Just tremendous free cash flow that they produce. So putting that into my model and using a weighted average cost of capital of 7.5, which is a conservative number for Abbvie, a very well-known company. Using that, a growth rate on the first 4 years of 5%, and then going forward of 2%, very conservative number for their perpetual growth. Putting those numbers into my model, I get a value of the company of $407 billion, but their market cap currently is $271 billion. So it leaves a nice room. Overall, a 50% discount on the stock currently is what my model tells me. There is one problem area. They did a big acquisition and they took on a lot of debt. And I'd like to see this number at 3 or less, but currently it's at 7. So I'm really monitor that and make sure that they don't get themselves into too much trouble, and make sure that that number continues to go down. All right, now looking at the stock in review, their performance has been really good. Over the last 5 years, they've grown really well, growth rate of 19%. Part of that was acquisitions, but overall, just a really good growing business with really good pharmaceutical franchises that they own. Just a tremendous free cash flow generator with a yield of 8% of free cash flow. They pay a dividend of 3.89%, which is a really nice dividend. And then their price to earnings is 20.51. In 2023, the last quarter they released was Q3 of 2022. Q4 and full year is within a month from now. We should be receiving that. But they increased quarter over quarter the revenue by 3.28%, which is pretty good growth rate. 2022 guidance, they're in line with the modest growth that they expect. And that would just continue to have this just be a really good, solid company that provides a good dividend. My outlook, Abbvie just continues to grow nice and steady and generate great free cash flow. It's a good, stable company. It's a good stock to own for long term. And I'm going to be buying more shares. So looking at the scorecard, is this an industry I want to be in? Absolutely. Pharmaceutical industry is one of those that the companies that have the right medicines and the right pharmaceuticals, the right franchises, they just profit for the long haul. They also have the really smart people within the company that keep the pipeline of good business pharmaceuticals in the company. The company is well operated. They've done really good acquisitions, and then they get a lot of value out of those acquisitions. Their debt is a problem area. I got to keep looking at that and make sure they don't get themselves into too much trouble, and make sure that I check that out, quarter after quarter, year after year. The stock is currently discounted based on my valuation, and I would buy more shares of Abbvie. Thank you so much for watching my video. I hope you found it interesting. Just let me advise you that this is for entertainment purposes only. I'm not advising that you buy Abbvie or any other stock or security. Thanks again for watching the video, and good luck investing in 2023.